Consumer confidence rises to a 6-month high. I'm Lisa Bernhard with Reuters, and joining me today is George Cipolloni of Penn Mutual Asset Management. George, the Conference Board came out today with data that showed that consumer confidence for August is at a 6-month high. What are consumers feeling good about? What are they feeling less good about?
So in terms of consumer confidence, the reason why I think it's hitting a 6-month high is for a few reasons. Number one, we heard from the Fed and we heard that interest rate cuts are going to start to come in play, which is usually good for a lot of consumers. If you think about consumers that are going to make big purchases, houses, cars, lower interest rates are going to be good for them. On the other hand, gasoline prices tie in pretty steadily with consumer confidence, and gas prices have gone down a lot over the last handful of months. And they're actually speculated to go down closer to $3 a gallon, which would be really good for consumer confidence. So core things that people spend money on, big purchases, interest rate related, and then on the other side, gas prices are all helping confidence in the U.S. consumer right now.
Okay, let's jump into the other big news of the week, which is Nvidia's earnings tomorrow. How much is riding on this since it's really underpinned the market when the stock has popped for so long?
Nvidia has underpinned the market for a long time now, and one of the big reasons is that their growth has been spectacular. Now, even as a value investor, I can certainly appreciate good growth, and Nvidia has done it. So everybody likes to cite Nvidia's valuation. Is it expensive? On a trailing 12-month basis, sure, it's trading at about 75 times. On a forward-looking basis, though, it is trading at 48 times. Again, not cheap, but their growth is following through. So what the market is looking for tomorrow is roughly a doubling of sales, which again, they've delivered quarter after quarter of really strong sales growth, and then roughly a 140% increase in EPS. I do think Nvidia has a very good chance of hitting those numbers. I think the biggest point is going to be future growth or outlook for growth, and then how the market takes it, because expectations have been pretty high. And even since that recent bout of volatility, Nvidia bounced back about 20%. So we can't say expectations are low heading into this report.
Talk about that recent bout of volatility. Markets were very volatile and plunged a few weeks ago, less so recently, right? So explain that and explain the ramifications of that.
Speaking to volatility, one of the most important things that we've seen over the past 20 years, let's just say, is a VIX spike, a volatility index spike over 50 is really important. Over 60, it's only happened 3 times. It happened back during the great financial crisis. It happened back during the COVID period. And then it just happened again, August 5th, 2024. So when you see a spike like that, the market gets scared because usually there's some kind of consequence, major consequence. So there was speculation about maybe more war in the Middle East or something happening that's just not going to be good for the markets. But the market responded, and the VIX bounced back to 15, which is a very calm, subdued level. And honestly, it shocked me as a market participant over the past 25 years. We've never seen anything like this. That was an absolutely historic move from peak to trough. And so where we are today, obviously the Fed has done a really good job of calming down the markets. And with Powell again set on starting to cut rates, volatility has pulled all the way back. So at least for now, there has been no consequence to a VIX spike at 65, which is incredibly rare.
So speaking of interest rates and Powell, who we just heard, of course, make the big speech from Jackson Hole on Friday, talk to us about gold prices and how they're really soaring to record highs right now and how that is partly due to the Fed.
The dumb rock gold, right? Gold has had a spectacular rally, or the pet rock as they call it. And so there's a few different reasons. Number one, gold prices are going up. I do think central banks are buying a heck of a lot more gold than they have in a very long period of time. That is sending a signal to the market, and it even is potentially an anti-dollar trade. So if you see interest rates potentially going down, the dollar should trade down, and then gold prices are going up, and other asset and commodity prices should go up as well. But gold in particular has had a tremendous rally. A lot of the gold stocks were trading it really, really cheaply. And I think a lot of the miners have suffered from, honestly, some really just poor margins. And I think now with gold prices at this level, they are starting to see a higher level of profitability. Now, across the miners, some are really good operators, some are not. So they all will not benefit the same. But gold really does look interesting here. Again, I do think one of the fears underpinning the gold move is the fact that We have a lot of debt globally. And at some point, faith in the dollar may diminish somewhat. We'll see how much somewhat is in the future, but that's one of the main reasons why gold is where it is today.